Despite global market recovery, gaming startups face their weakest funding year in over a decade. Player engagement and consumer spending remain high, yet venture capital interest wanes. This decline highlights a significant shift in investment priorities, challenging the gaming sector's growth potential. In the first half of 2025, gaming startups secured just $627 million, a stark drop from $2,820 million in 2023 and $12,470 million in 2021. Quarterly figures reveal a deepening crisis. The first quarter of 2025 saw $396 million, while the second quarter plummeted to $223 million. This shift indicates a structural change in venture capital's approach to gaming investments. The gaming startup funding landscape has experienced a dramatic boom and bust cycle. After peaking at $12.5 billion in 2021, funding has plummeted by over 95% in just 4 years. The 2025 trajectory indicates the weakest year since before 2019, highlighting a significant shift in venture capital dynamics. Player demand remains robust, with 190 million United States gamers and $57 billion in consumer spending last year. Despite a 95% funding decline since 2021, engagement is strong. Public companies like Roblox, Nintendo, and Take-Two Interactive have rallied, affirming solid market fundamentals. The downturn isn't due to consumer interest, but rather venture capital hesitance. Mergers and acquisitions in gaming are thriving, as seen with Scopely's $3.5 billion acquisition of Niantic's gaming business and CVC's $2.5 billion investment in Dream Games. These major deals highlight strong buyer confidence, contrasting with venture capital's retreat from early-stage gaming investments, indicating a disconnect in market perspectives. In 2025, the largest funding rounds in gaming were notably smaller, with Underdog Fantasy leading at $70 million. This shift indicates a cautious approach by venture capitalists, who are now less inclined to prepare gaming startups for initial public offerings, contrasting sharply with the mega rounds of 2020 to 2022. Turkey leads with 36.4% of large round gaming funding, highlighted by Grand Games' $30 million. The United States follows at 32.6%, showing caution in new investments. South Korea, with 9.5%, sees Hybe IM's $20,400,000 boost. The United Kingdom captures 7.5%, with Slingshot DAO's $16 million in blockchain gaming. Turkey is emerging as a key player in mobile gaming, capturing over 1/3 of 2025's largest funding rounds. Its technical talent and lower development costs are attracting global attention. In contrast, China's gaming presence is unexpectedly small, and the lack of large late-stage rounds indicates a cautious investor approach towards public market positioning. Rising development costs and declining revenue predictability are reshaping the gaming industry. Major companies are canceling high-profile projects, and layoffs are widespread. AI companies like OpenAI are absorbing capital, offering tools for game development. Venture firms are skeptical about gaming's growth potential, adjusting expectations after the 2021 peak. Artificial intelligence is transforming game development by reducing the need for large teams through tools that generate dialogue and assets. This shift is redirecting capital from gaming startups to AI infrastructure as investors seek faster, predictable returns. This paradox of cheaper development yet reduced funding is reshaping the gaming industry's financial landscape. The quarterly funding trajectory for gaming startups shows a concerning trend. After stabilizing in the fourth quarter of 2024, funding plummeted in 2025, with the second quarter reaching a low of $223 million. This decline indicates a deepening downturn, highlighting the challenges faced by small and mid-stage gaming companies in securing venture capital. Despite a downturn in venture funding, 2025 shows a paradox. Consumer spending on games exceeds $57 billion annually, and major gaming stocks like Roblox and Nintendo are thriving. Acquisitions are robust, and the talent pool is rich. The missing link is venture confidence in small and mid-stage gaming companies. Gaming venture funding has hit a low, with 2026 potentially dominated by incumbents and AI-enhanced platforms. This shift could thin the startup layer, reshaping the industry for the next decade. By December 2025, the trend suggests a future where established players overshadow innovative newcomers, altering the competitive landscape. The downturn has concentrated global gaming talent, eager for new opportunities. AI-assisted workflows have slashed development costs, making high-quality game creation more accessible. Consumer engagement is at record levels, indicating a massive appetite for gaming content. These factors create a fertile ground for the next breakout studio, provided investors seize the opportunity. 2025 marked a historic low in gaming startup funding, with only $627 million raised in the first half. Mega rounds vanished, with the largest at $70 million, as venture capitalists pivot to artificial intelligence. Turkey, the United States, and Asia lead in major deals, reshaping gaming investment geography. Despite this, concentrated talent, reduced costs, and high demand signal potential for new breakout studios.